Lately, you've probably seen more people talking about Bitcoin, gold, or even silver. And nowadays, it's not just finance YouTubers talking about these different types of assets. Everyday people are starting to move a piece of their savings into these different assets. And if you're wondering why, it comes down to trust. People are starting to lose trust in the traditional money system, and they're realizing that the dollars that sit in your savings account are quietly losing value every single year. And these people, like us, they want something real and tangible to protect what they've worked for. So in today's video, I want to break down exactly why this shift is happening and what debasement investing actually is. Also, why lately these investments have exploded in popularity and how I personally plan to allocate a small percentage of my portfolio into them. So let's start with the basics. Debasement used to mean when a government would take a gold or silver coin and literally reduce how much metal was inside of it. They would melt it down, mix in cheaper metals, and then stamp the same value on it, even though that coin was technically worth less. And that was basically inflation before inflation had a name. Now, today, we don't use coins anymore, but the same things happen in a modern way. By printing more money, when the government or the Federal Reserve increases the money supply, it doesn't mean you suddenly have more money or more wealth. It means the dollars you already have are now worth less because there are more of them chasing the same amount of goods. There's more dollars in circulation. And the more there is of something, technically the value goes down. It's just like watering down orange juice, right? The flavor is going to get weaker the more water you add. And that's what's happening to your money. The more money they add, the more our dollar gets weaker. And that's why people are buying things like Bitcoin, gold, and even silver. They're all forms of protection against that quiet dilution that's happening between currencies around the world. Even, for example, in the US, since the start of 2025, the American dollar bill has lost over 10% of its value due to inflation and money printing. And over the last few years, trust in traditional money systems has taken a huge hit. Governments printed trillions of dollars during the pandemic. And during the pandemic, prices for food, gas, housing, pretty much everything skyrocketed. Meanwhile, savings accounts paid basically nothing. They paid realistically no interest. So you could keep $10,000 in a bank account for a year and you'd lose 6 to 7% of its value just from inflation. That's like paying, a hidden tax for just trying to save your money. And it's not just the US. This is a global problem. Japan, the UK, Argentina have all been dealing with some level of currency weakness. And people are realizing that money doesn't hold value the same way it used to. So they're looking for assets that can't be printed anymore, that don't rely on central banks or political decisions to determine their value. That's what makes Bitcoin, gold, and silver so appealing nowadays. They exist outside of the traditional system, and no one can just create more of them on a whim whenever they want to. And people are turning to hard assets because there's a psychology behind it. And this is the important part. It's not just about math or economics anymore. It's become very emotional. For a lot of people who are working hard and saving, it doesn't feel like a payoff anymore. You see your rent go up, you see your groceries double, and at the same time, your paycheck's staying the same. And that creates a lot of frustration, a lot of stress, and a lot of anxiety for a lot of different people. And this sense makes a lot of people believe that the system is rigged against us. So investing in hard assets becomes more than just a financial decision. It becomes a personal decision because it's a quiet way of saying that you're taking control of your finances and you're storing your wealth for yourself. Gold and silver have always been seen as a store of value. Now, they don't pay interest, but they hold purchasing power. And Bitcoin is the modern evolution of that same mindset. Digital scarcity instead of physical scarcity. It's the first asset that combines technology, transparency, and a limited supply, all things that people care about when they feel like the system they trust is failing. So first, let's talk about gold and silver. Before Bitcoin existed, people used gold and silver to protect themselves from currency debasement. And today they still do, and if anything, it's more popular than it's ever been. Gold inherently has one job: hold value. It doesn't really change with trends. It doesn't depend on CEOs or profits. It has pretty much survived every major financial collapse over the past thousands of years. And that's why central banks themselves are quietly buying record amounts of gold right now. And we still see, especially like the United States, still has a massive reserve of gold. Silver, on the other hand, plays a slightly different role. It's part money and part industrial metal. So it's used in solar panels, electric vehicles, and electronics. So as the world becomes more tech driven, silver is both an investment and has utility value, because as things start to increase on the technology side, we're going to see the price of silver more than likely follow that and see an upward trend, because silver is going to become more popular to use. And the cool part is silver is historically undervalued compared to gold, meaning it often plays catch up when gold starts rising. And that's why, especially year to date, we've seen such major climbs not only on gold but also on silver. So now let's go over Bitcoin. Bitcoin is often called digital gold because, just like gold, there's a limited supply. There's only 21 million coins that will ever exist. And that's it. No one can change that number. No politician, no CEO can change that number. Not even the creator himself. Bitcoin runs on a decentralized network, meaning no government or company controls it. It's verified by thousands of computers worldwide, making it nearly impossible to manipulate. And here's why that matters. When the government prints more dollars, it benefits those closest to the money first: big corporations, banks, investors, while regular people usually take a good hit later and also have to play catch up. Bitcoin flips that. Everyone plays by the same rules. No one gets early access, no one gets favored when it comes to Bitcoin. It's also borderless. You can send it anywhere at any time without needing permission. That's why people in countries with typical unstable currencies have already started to adopt it heavily. So even though Bitcoin is volatile, you are going to see it go up and you are going to see it go down, people see it as a true hedge against the system that's even more unstable in the long term. The bigger picture is, over the last few decades, investing was all about growth, chasing the next big tech stock or startup, but now a lot of investors focus on preservation. We want to store our energy, we want to store the work we do. Life is not going to get any easier, so we want to protect and play defense with the money that we've made. And it's not anymore about not only how do I grow my money, it's how do I protect it from losing value. And that's why we're seeing this massive shift towards hard assets, whether it's real estate or gold or Bitcoin, commodities, silver. Some people are even buying art or just land, because they're not things that are going to make you rich overnight, but they give you something real. They give you tangible value, something outside of the financial system that's going to be inflated anyway. So in a world full of uncertainty, that's a lot of value. That's worth it for a lot of people. Now, let's talk about how I personally think about this in my own portfolio. Now, for those of you who don't know, I'm 25 years old and I have a very long-term outlook when it comes to investing. I plan to keep investing for the next 20, 30, or even 40 years. Now, what I'm about to say is not financial advice, just insight into what I'm doing and how I plan to position myself with these debasement investments. I'm building a long-term portfolio designed to grow but also stay protected at the same time. So I want exposure to both sides, right? I want assets that build wealth and I want assets that preserve wealth. So the way that I set myself up is, on a weekly basis, I do currently buy Bitcoin, right? I think Bitcoin, even though it's $120,000 a coin, I think in the next 20, 30, and 40 years, it has a very long way to go. I think it can go up tremendously in price. So I continue to buy weekly amounts of Bitcoin. Now, when it comes to actual silver and gold, you can actually do this two ways. You can buy the precious metal themselves by going to a verified dealer and buying gold coins or silver coins or gold bars or silver bars, whatever it might be. Also buy ETFs that track the price of gold or track the price of silver. Now, I'll be completely honest with you guys. I do not have any gold or silver holdings. If I were, and when I do plan to buy gold or silver, I am more than likely going to buy an ETF versus the actual precious metal. It's complete personal preference, but at the end of the day, I don't want to have to worry about hiding it somewhere or holding it somewhere. I would just rather have an ETF that tracks it for me. Now, at the end of the day, it's all about balance, right? Letting your money grow is the goal for all of us. So as long as you're balanced between, growth and assets that are going to protect your wealth, you're probably doing the right thing. I would say more so when it comes to Bitcoin, gold, and silver. If you're younger, I would think it's okay to have a smaller allocation of these things versus if you were older and you wanted to protect your wealth more, then you could probably have a higher allocation of these things. But once again, at the end of the day, it's all personal preference. The takeaway from this video is I don't want this to be some type of fear-mongering video, right? What this is about freedom. Investing in things like Bitcoin, gold, and silver isn't about doom and gloom when it comes to inflation and how the system's against us and how we need to worry. It's more so about how can we beat out the system? What can we do as normal people to hedge our money and to grow our financial freedom? And half of that is having your wealth in something that can't be printed, can't be seized or manipulated by someone else's political party or decision or CEO. Right? We're living in a time where currencies are weakening. It's just the truth. And trust in institutions is fading. And people want their own control again. And that's what this movement is about. And that's why we've seen debasement investing become so popular recently. Because the reality is no one can predict the future. I can't tell you gold's going to go up. I can't tell you silver's going to go up. I can't tell you Bitcoin's going to go up. But you can prepare for it. And a small allocation of hard assets gives you that peace of mind. And sometimes that peace of mind is worth more than potential return, especially with how we've seen the dollar bill devalue so much. So whether you own any of these assets or not, it's definitely worth paying attention to because the shift away from actual money towards scarcity is already happening. And, it's not about getting rich quick. It's about not being the last one holding devalued cash when, inflation continues to grow an extra 20-30%. So if you guys do debasement investing, let me know what you currently buy, whether it's silver, gold, or Bitcoin. Let me know your thoughts on this video. And I hope you guys have a good day, and I'll catch you guys in the next video. See ya.